Hello, I'm Daniel Dobbs, and welcome to my YouTube channel, Straight Talk Lending. My team and I have been loan brokers in Southern California for 4 decades. Here's my resume. Despite all the tech changes, fundamentals of shopping for a loan and choosing a lender have not changed. Buyers want the lowest rate, lowest fees, and the fastest service. They can have all three, but the mortgage industry is about short-term profits at the buyer's expense. I'm about to expose the rate gimmicks, the false advertising schemes, and the hidden junk fees that cost buyers thousands of dollars. Oh, and by the way, I'm not interested in being a YouTube celebrity, but I do have an agenda. I want to earn your and your real estate agent's loan business and future loan referrals. And when loan brokers aren't the best choice for a lender, I'll point that out. That's been my business model for 4 decades. So call us. We pick up the phone after hours, on weekends, and on holidays. Rates are up, lending revenues are way down, mass layoffs have ensued, and are slowing closing times. And if you're buying a home, closing your loan late has ripple effects. It costs time, money, and disrupts every family member's schedule. And if you plan on doing repairs before moving in, closing late in an already tight labor market will be a nightmare. In 2022, Wells Fargo got nailed for $3.7 billion for RESPA violations. RESPA protects the home buyers against false advertising and kickback schemes and other predatory lending practices. On February 10th, the CFPB, a division of the U.S. Treasury, began ramping up RESPA enforcement for online lenders and their advertising platforms who are manipulating their search engine results to coerce kickbacks for top search placement. This practice locks out lenders with lower rate and lower cost while driving up the cost of borrowing for buyers. Here's a frame capture of a typical rate platform. I've removed all the corporate logos on the left for my legal protection. Platforms such as LendingTree and NerdWallet provide very basic lending information. That's their hook. But in reality, they're just advertising platforms. And these green icons on the right are just clickbait. No rates get disclosed by clicking on them. After the initial click, buyers get led down a wormhole to complete an online loan application. And after they complete the app, the rate platform sells the buyer's data to as many lenders as possible. And LendingTree has built a brand on this, selling a buyer's data. That's how they pay the bills. Buyers don't get lending offers, they get 10 to 15 lending solicitations, plus incessant follow-up calls, then spam texts, spam emails, and it doesn't stop there. Your private data then gets sold to data brokers, who in turn sell it to local moving companies, contracts, and countless others. But don't take my word for it. Ask anyone in your orbit what their online lending experience was like. Or try it yourself. Fill out the app and use a nickname or a pseudonym. Now the CFPB has Rocket Homes and Mortgage and their other subsidiaries on their radar. This 12-count civil filing is a result of a 3-year investigation. Legal disclaimer: Rocket Mortgage and its subsidiaries are innocent until proven otherwise. Here's the proof of filing in the federal court in D.C. The alleged counts include deceptive and abusive trade practices, patterns designed to deceive consumers, and violations of data privacy, just to name the top 4 of the quadfecta of lending abuses. Please hit pause if you need more time. Here are the 4 types of loans that represent 95% of all home loans in the U.S. Conventional loans, aka Fannie Mae, have the lowest wholesale rates for loans under $1.1 million. The lender's profit margin and markup is what determines the buyer's retail rate. The higher the lender's overhead, the higher the rates. Many lenders talk like they have access to discounted rate, but it's a grift. There's no free money. But too many buyers get lured into it, and that's why lenders keep doing it. Which type of loan you will choose will depend mostly on your down payment amount, your credit score, and whether you're a veteran. Note, I personally handle all the VA loans at my brokerage. Applying for a loan is easy. Getting it approved and funded isn't. Here are the first 12 reasons why not. And here's the real grift. Most lenders only want to provide a buyer with a pre-approval letter, which is virtually worthless. Just ask your real estate agent. Most lenders do not want to take 2 to 3 hours to process the paperwork in advance of the buyer writing offers. Any experienced MLO can usually vet a buyer and have a full loan approval within 24 hours. Even in a slow market, competitively priced homes will have multiple offers. For buyers to be the strongest offer and get the best sales price and possibly closing costs, the buyers need a full so-called DU loan approval. The seller wants to know the loan will close and close on time. Don't lose out on your family's perfect home because your current lender is understaffed or lazy. Insist upon a full loan approval or move on to another lender. Here are the other 17 reasons loans close late or not at all. Please hit pause for more time. There are 3 types of lenders. I'm a loan broker, so I'm obviously biased, but we are limited to those previous 4 loan types. Banks and credit unions are your best bet for construction, land, home equity, down payment assistance, and commercial loans. Loan brokers and credit unions are both relationship lenders. We don't do Superbowl ads or sell our clients' data. We have the lowest overhead and the thinnest margins because we are relationship lenders. Loan brokers have the most stringent licensing standards. MLOs must be federally licensed with the National Mortgage Lending Service in Washington, D.C., aka the NMLS. Annually, MLOs must pass an annual background check and complete 8 hours of continuing education every year. Anytime an MLO is arrested for anything, lending related or otherwise, their license is immediately suspended pending the MLS investigation. Back in the 1980s, during banking regulation, the California Department of Real Estate required all loan brokers to be licensed through them, and that continues today, even though only some MLOs sell property. FYI, buyer beware. It's never a good idea to use your MLO as your real estate agent, or vice versa. There are just too many conflicts of interest that will arise. Trust me on this. Please hit the pause button if you need more time. If you have a 720 FICO score or above and 20% down and belong to a credit union, run. Don't walk to your nearest branch. But credit unions do have restrictive lending guidelines for credit scoring, job changes, how they calculate any wage increases, overtime, bonus, and commission monies. All these restrictions can kill your deal or at least limit the amount of loan that you qualify for. Don't let that happen. Also insist upon a full DU loan approval or move to a lender that does. Please hit the pause button if you need more time. Banks have a niche in the mortgage marketplace. Buyers with private banking status should apply there. Otherwise, buyers will need to shop around. Many banks have pulled out of the lending market for borrowers with less than 20% down and under 720 FICO scores. Then there's online lenders. They've tried to fill the banking void by trying to be all things to everyone. In a post-COVID marketplace, all the big budget lenders have been able to marginalize the real estate community and the agent relationships, which are considered a one-off in the transaction and all but irrelevant. Recently, online lenders have begun offering high-risk loans. When lending activity plunges, all types of stated income 40-year loans with negative amortization and prepaid penalties appear on a buyer's radar. A perfect gimmicky example is the 2-1 buy-down mortgage that is being hyped at the cost of 3-point lender's fees. On a $500,000 loan, that's $15,000. Because of the enormous commission paid to lenders, including many loan brokers, they're pushing this loan. They alibi the process by telling buyers that the seller is paying the fee, or the agent is paying the fee, or some lenders even claim the fees are refundable when the buyer refis in the future. In reality, the buyer is paying for it. There's no free money. Let me prove it to you. Before you commit to any lender or this loan product, demand proof, and for the lender to provide 1, a copy of the loan's promissory note, and 2, the adjustable rate rider. That's where you see the specifics and the hidden details of the loan. Don't take their word for it and then just blindly go to escrow and sign documents. Verbal promises aren't worth the paper they're printed on. I have a page on my website, danieldobbs.org, exposing the math of the 2-1 buy-down gimmick. Featured here are the macroeconomic pressures that affect interest rates. Please note that rates go up much faster than they come down. Please hit pause for more time. Here are the buyer-specific rate factors that drive a lender's rate to the borrower. The 3 most important are credit scores, down payment amount, and loan type. You should be aware of the other 7 factors and how the pricing adjustments are set. When buyers see an advertised interest rate, it's most likely a unicorn rate. After all, what lender would advertise their highest rates? Unicorn rates are for buyers with 30% down, a 760 FICO score, and who can close escrow in just 15 days. That's including weekends and holidays. Who fits the buyer profile for the unicorn rate? Only cash buyers, but they don't need a loan. This is the most critical part of the webcast. When first shopping rates and lenders, always demand an initial rate quote with no points. Buyers can choose other options later. Having a clear benchmark makes comparison shopping so much easier. Secondly, you will get to observe which lenders use high-pressure sales tactics to push for points. Often, paying points is a profit center for the lender and not in the buyer's best interest. Currently, rates are high, so have as little skin in the game as possible and refi when the recession hits. The next three frames are the good faith estimate and truth in lending statement, which the feds combined into one form several years ago. So I've just featured the first 3 pages as the 4th page is blank. Here is page 1. The red arrow points to the interest rate. Please hit pause to review any other parts of this form. On the top left-hand side, the second arrow is the most crucial box where you'll find lender's fees, and that's where the junk fees really jump right out. The 4 red arrows on the right side are self-explanatory. Please hit pause for more time. The outlined red box features the APR, which is the annual percentage rate, and it's calculated as if the buyer will have the loan for the entire term of the loan, which is usually 30 years. That's not going to happen. A buyer may have the house for 30 years, but they won't have the same loan for 30 years. Buying a home begins with choosing the best lender. The search process starts with a referral from your real estate agents, then check out professional licenses. Here are the website addresses to do that. Then when speaking with an MLO, conduct your call like a job interview, because it is, and you're doing the hiring. Once you commit to a lender, it is difficult and time-consuming to change to another. Some buyers think at the 11th hour they can call another lender and use that lender as leverage against their current lender. That's folly, for many reasons, too lengthy to go into here. Just do your due diligence. It's a methodical process, that's all. I started this webcast by stating that I have an agenda to earn your loan business and your referrals and that of your agents with my straight talk style. I hope I've done that today, and I hope you feel these moments were well spent. Thanks for tuning in. If you're buying or refinancing a home anywhere in California, please call my cell. My team and I really do pick up the phone at all hours on weekends and holidays. That's a wrap. Thanks for tuning in. Please hit the subscribe button for more videos.